Okay, I have a spicy one. Are you ready?
Here we go.
It's from Taco Friday.
Hey.
It says, my parents took out a whole life insurance policy on me when I was born. They now want me to take over payments, but I don't want to be involved with it. What is the best way to approach this?
Well, this is, by the way, this is very common. I don't know.
Come on. I was like, ooh, drama.
No,
spice.
I'm going to let Bo, but I don't mind sharing that my parents did the exact same thing on me.
All right.
These are the people that their idea of investing was CDs.
Yeah. Had
no idea about it just going and buying, Fidelity Magellan or the S&P 500 back in the 80s and 90s when all that stuff was crushing it.
Yeah.
They just thought CDs. But somehow along the line, somebody, I don't know if they knocked on the door or relative or called, somebody got a hold of my parents and sold them a whole life policy on me.
Yep.
Their son. And
as you got older, they ended up giving it to you, right?
Well, yeah. So here's the question. What did I do with that money? Am I sitting on a whole life policy?
What would you have done if your parents were like, hey, you have to keep paying on this?
Full disclosure, I was not the full financial mutant I am now back when they gave me this, because I'm going to give Taco Friday, or you and I together are going to give all the options, how to do this best. But when Grip and Rip Brian had this back in my early 20s, I was thinking with love on my heart, I was like, man, there's like $2,000 of cash value in this thing, and I'm trying to get married. I need to buy an engagement ring. I cashed that puppy in and got that engagement ring. Now, that's not necessarily what Taco Friday should do. It might end up being what you do, but here's what we think you ought to do. Bo, you worked in insurance for a period of a season of life. What are some of the things that you can do with whole life policies, especially when they have cash value?
Yeah, there's a few tactics you can do, but this, I want to be clear. When I hear this question, this sounds to me like a relational question, even more than like a tactical question, because he's saying, Mom and Dad expect me to keep this thing going. How do I navigate that? Because I don't want to. So he's already made the decision. He doesn't want to do it. And so I think I would then ask my parents, hey, one, Mom and Dad, first of all, thank you so much for saving for my future. That's awesome of you guys to think about that.
Well, were they saving for your future or just saving to make sure they could pay for your burial expenses?
Well, either
both? I don't know.
That is often how child life insurance gets. I don't know if you know that, Reeves. The way that they sell it is like, hey, what if something happens? You got to bury it, which is a super morbid way to sell it. But that's the way that it goes. But you ought to have the question, hey, Mom and Dad, thank you so much. What was the reason that you bought this thing for me? Right? And then let them, like, you got to hear them out. Okay, great. I think that in order to accomplish that goal, there might be some better things. You know what I'd love to do? I'd love to put money in my Roth IRA. Instead of paying that premium, I want to go put money in a Roth. Instead of doing this, I want to do this. And that way you kind of paint the picture from, hey, the goal that you had for me is the same goal, but I think there might be a better tool, a better method, a better mechanism to get there than the method that you guys have been using thus far. And here's the great news. If you have a whole life policy that's been paid into, in your case, from like 0 to 18, you can probably do the math on it and see, oh, that's different than if this had been deployed a different way. So I think maybe, I say educating your parents. I want to use that term very loosely because no parent wants their kid to come in and like educate them. But having a conversation with what's this thing really done and what are realistic alternatives that might make sense. So that's all the conversational part. What Brian was alluding to is you can actually call and say, hey, there's a few things I can do with this policy. I could just surrender it, just like Brian did. I can get rid of this policy, take the cash value, go buy an engagement ring. That'd be great. Tell them, hey, you're going to have a Taco Friday. You're going to have a new child-in-law, and hey, maybe you're going to have some grandbabies one day. And generally, grandparents are pretty happy about, or parents are pretty happy about that. You could also say, hey, I want to call the insurance company and say, hey, if I just wanted to take this cash value and I don't want to pay any more into it, how much paid up insurance could I turn this into? Like, what if, okay, Mom and Dad, you want me to have life insurance. I hear you. Instead of me having to keep putting my hard-earned dollars into this policy to pay for it, what if we just have it paid up? We use the cash value right now to guarantee that there's some level of death benefit available for me, and you just look at what that number is. So if the policy they bought you was $100,000 and now the paid up death benefit is $30,000, you just ask Mom and Dad, hey, is that what you want me to have, that policy? And then you navigate it that way. I don't think it's crazy either one of those, but if you don't want to keep paying on it, I don't know that I would arrive at, well, Mom and Dad want me to, so I guess I keep throwing my money in it. Because I don't know that that's the best use of your dollars, but you want to do it delicately so that you don't mess up some relational bridge, because I guarantee they did it with good intentions. Just like I bet your parents, they did it with good intentions.
Oh, for sure. It's just that, being a financial mutant now, I wish they'd opened me a custodial Roth.
Of
Those
course.
didn't even exist in the 70s, by the way. But they do now. So I'm just telling you, there's a lot of opportunities if you're thinking about for your young children, 529s, custodial Roths, once they start making money. And you report it to the government. Let's load up those investment accounts. When Bo was talking about cashing in, I will say one thing you always need to be aware of. There's going to be potentially a tax liability with that. So understand, go compare what premiums have been paid in versus what the cash value is worth so you can figure out if there's a taxable gain. Call the insurance company. They can help you with that calculation. The other thing is you might find out if you do the paid up insurance that Bo discussed, just like he said, if it's $100,000 face insurance, but you do paid up, it might drop it down to $30,000 of death benefit. But then you go comparing, you're like, well, wait a minute, the cash value's $15,000. Do I get 30 plus 50? No, you get 30 if you die. And then you start thinking, well, I don't think I'm going to die in the next 10 years. That's where you have to take in the opportunity cost of what the cash value is versus the death benefit, plus whatever the taxes are. And then it's like Bo said, when you start out in your 20s, you want to be thinking about how do I get my army of dollar bills working for me? And that's why we have the financial order of operations. It gets really exciting when we get around step 5 with the tax-free growth, the Roth IRA investing. And more than likely, you're going to want that like in a low-cost index fund and go just take advantage of these law of accelerating returns and all the developments that are going on with technology. It's probably not to fund a life insurance policy. So get the order of operations, have that good communication with your parents, and then make sure you're maximizing every opportunity that your army of dollars has.